Please hold while I confirm your passcode.
Thank you. Can everyone hear me?
I can hear you. Okay, I'm going to mute the lines now.
All guests have been muted. You can unmute your line by pressing *6.
Hello. Hopefully you can hear me now.
Yeah.
I've unmuted. Yeah, good. Okay, I've unmuted myself. I get muted with everybody else. So welcome to today's session. This is focused on Ariba procurement contract compliance. I will admit there's a lot of detail in this topic, and I've tried to give you as much of a high level as I possibly could to cover many areas of contract compliance. So we'll get through this. There aren't too many real natural breaks. I'm going to try to pause and get questions. Deborah is monitoring chat, and if it starts to build up, somebody can just yell at me. So just quickly, we try to say there's an intended audience for this. This isn't necessarily focused on administrators like some of our other sessions have been. This is really for anybody in procurement. So this is your analysts, your procurement manager, operations areas, anyone who has a general interest in contract compliance. A quick introduction of myself. I work in the business practice center as a consultant for procurement subscribers. I have a little more than 7 years of working with P2P on demand in multiple companies in those years. So this session is going to provide an overview of contract compliance as it relates to Ariba procurement, which some people refer to as downstream. We will touch on areas that are also upstream, but not in as much detail, okay? There will be some differences in functionality that I show here when a client is to be integrated, and also if you have collaborative sourcing connected. So that's what Suite Integrated is. So you may see contract workspaces that you won't see when I do demonstrations today because I'm in a non-integrated site. But we will talk about those in our session today. Okay. So let's just give a little quick overview and some definitions. A contract is an agreement that's going to have terms for purchasing your goods or services. Usually pricing is a term. We consider that a term. Pricing and discounts, those are basically what we consider those terms. Again, they are included, maybe even a maximum total cost is also in there, and how long the contract will last, how long these purchasing terms are in effect. A release order is one where we're going to ask for a purchase order before the invoicing, and a no release will allow us to invoice directly against the contract. And there are good reasons for using either one of these, and we'll discuss that a little bit more in today's session. So let's talk about what contract compliance is. Contract compliance maintains contractual agreements. So you've gone out and you've sourced with, or you've come to an agreement with a supplier on these purchasing terms. Contract compliance enforces those when the purchases are made. It's a set of features and functions that are incorporated into Ariba procurement and the invoicing solution, so you can also use this with Invoice Pro. It tracks and saves your performance and your commitment for future analysis, which is also good that you don't necessarily get from all of your, if it's strictly PO-based procurement, right? Now, contract compliance is maybe sort of the hard part of, or the hard compliance piece. Procurement and invoicing also offer what we call soft or passive contract compliance, and that can be done simply through catalog, right? So if you have a catalog in place and it reflects the pricing that you've negotiated, a discount or what have you, with your supplier, that's contract compliance in a very passive way, right? But today we're going to talk about it as it relates to contract terms and so forth, right? So we're going to be able to track our commitments, the supplier performance and the savings. It's also pretty easy to discount on those catalog items. So you may have a catalog with a supplier, but it doesn't reflect those discounts because they don't want to maintain multiple versions of their catalogs. Putting a contract against that allows you to get the discount that you worked on with that supplier just through a regular purchasing process. Nothing much changes, right? It's just a better procurement process for those types of purchases that will be repeated and you don't know what that future quantity is. Your office supplies are a very good example of that. You don't exactly know how many boxes of pencils or how many staplers will be requested in a year, but you want to have a discount on that based on an expected volume of spend with your supplier. Okay. So how does it work? Well, we have this sort of, these contract compliance is based on a set of individual contracts and the configuration settings that we're going to put in place. And it gives you that strict, that hard control over who maintains the contract, who can buy against the contract. You're going to look at enabling a subscription of contract items into a catalog hierarchy for selection by a user. These are how you're going to enforce it. You're going to have automatic line item matching on your requisitions so that it'll know that that's a contract item and give you those discounts. You can enforce through the release. You can have a requisition approval rule that's just specific to contract releases. You can have your receiving against those, so the receipt of the items or milestones if it's services and you're tracking those milestones. And then you also have contract-related invoice exception types. Just as we have on our procurement purchase orders, we can also have exception types that relate to contract releases. Okay. Now, we've been talking about contract terms and what those are. So we have pricing types, which are sort of when we go in, you're going to see these defined. A supplier level, that covers all the products from a given supplier. So if you purchase from ABC Telecom or something of that, then everything that you buy from them is considered at that contract. And so you may have said, okay, 10% across the board, that's what that is. Catalog level covers all the products in a catalog. If they're punch-out items, it'll only be attached if the items are part of the catalog subscription. And we'll talk about that a little bit further on, but you can define whether or not you're going to allow non-catalog or catalog line items. Commodity level, all items based on a specific commodity, but it's also related to a supplier. So you can't just say everything that's a 4312 commodity code, I get 5% across the board. You have to do that at the supplier level as well. Item level is one it's a common one, and this is specific to the items from a supplier. This is where when we're building and we say, okay, for say the lease of equipment, this is my price. This is my negotiated price. That's item level type of, you can sort of almost build your own catalog. Okay. Contract types, release or no release. Often the question, which shall we do, right? So release orders are where we're going to use a PO-based process. When you want that spend authorization, that's the process that you'll use. No release order contract where you're going to bring the invoice against the contract. Some organizations, it's enough to have the contract and its full amount of spend authorized. Each purchase or transaction does not need additional authorization, and you're going to allow that spend against the contract to come in just simply through an invoice-based process, right? That's sort of that no release. When we look at our contract options, a 2- or 3-way match, well, 2-way if it's your contract and invoice, 3-way if it's your contract, your invoice, and your receipt. A blanket purchase order, basically, do you want to have a max cap on your spend with this sort of this supplier? Do you want to say, okay, I budgeted $100,000 in this category of spend with this supplier, and as long as it doesn't exceed that, we can take invoices against that, right? That's a blanket purchase order. Hierarchical or single standalone. So we'll talk about the hierarchies in more detail, but we basically have a master agreement, and then that has sub-agreements, which, master agreement is used to group those sub-agreements. Then you have a sub-agreement, which can be a parent and have children, other sub-agreements, or you have a standalone, which really has no hierarchy at all. Okay. And again, we'll be discussing these in a little bit more detail. Okay. So I mentioned before a 3 integrated site. So contract management, when it's integrated with your Ariba procurement or your invoicing solutions, then you can start the creation of a contract within your contract management. It actually, that is where you will. It's not that you opt to, that is what will happen, right? So in a 3 integrated site, you're taking care of 3 key areas of your contract lifecycle management. You have your document creation, your collaboration, and a repository, okay? In your document creation, you have your template library, you have your clause library, your Word integration, and contract terms, right? Whereas in contract compliance, you're enforcing that compliance. You're going to have the terms, the contract hierarchy, and you can still monitor your performance and savings tracking, which is good. Okay. So your collaboration can also occur in contract management, so you can have a negotiation and workflow. If you try to do that in procurement, you'd have to do that through a collaborative requisitioning process, slightly different, right? And then there are some folks that use contract management as a repository and be able to search on those contracts, right? So that's also another feature in that area. So I was saying we were going to get to that hierarchy, and here we are. So a contract hierarchy is a set of related contracts that can share accumulated amounts or pricing discounts, right? So this is advantageous when you may have different types of agreements with the same supplier, but they can roll up to one larger. You want to accumulate that spend to get a larger amount of discount or whatever those pricing terms may be, right? So you can better track and manage multi-level and very complex vendor agreements. You have the visibility to spend at master agreement level, so this is that aggregated level, as well as at an individual sub-agreement level. So you can track what you're spending on specific items in an item level contract. You can also then look at what you're spending total with the supplier if you have multiple sub-agreements at that master agreement level, okay? They're really good when you have different pricing types with a supplier. So you may have a discounted price on a specific item, but then a flat discount on everything else, right? There's maybe that one key item that you get that special pricing on, and then, but everything else across the board, you're going to get 5%, right? So that's when you have those different discount pricing terms, and then you can manage those with sub and master agreements, okay? So we'll talk about which each of these are. So when you're creating your contract, you're going to decide which kind of hierarchical type. Now, a standalone is a standalone. It can be associated, as well as a sub-agreement can be associated with a master agreement, but only to a certain part in the process. If you don't do it before it's fully approved, it can't be reassociated, right? So a standalone is a type of contract that is not part of a hierarchy, just there standing on its own, allowing you to apply those terms to your purchases or your invoices. Master agreement, that's your highest level. That's top level of a contract hierarchy. Usually this is where you begin. So when you create a contract hierarchy, you begin by designating the master agreement, okay? The sub-agreement then can be apparent, as you can see in this diagram. This one actually has even a sub-agreement of a sub-agreement. We can have that. You can't specify a parent agreement that is more specific than a sub-agreement. So you can't have, and that means you can't have like an item level contract could not be referenced as a parent to a commodity. So we can have a commodity level to an item, but we can't reverse this because this is more specific than this. I'm going to pause there for a moment and ask if there are any questions. I think that's maybe a nice place to stop. All right, I'll keep going. Creating your contract request. So you can be granted access to create a contract compliance request directly using contract compliance features of Ariba Procurement or the invoicing solution. So this is something that you can do directly in procurement. You do not have to have contract management to do this. However, if you're creating from a contract workspace in a integrated site, then you can create the contract compliance request as part of your contract workspace. Contracts and contract compliance requests then get created, changed, or submitted from the workspace, not in the contract request. Also, you can upload from Excel templates. So you can create a new contract compliance request by uploading Microsoft Excel file with all the terms and pricing information. It has to match the format in Ariba. So we do have a specified format. And we usually say the best way to start this process is to take an existing compliance contract out and export it into Excel, and then take that file and use it as your starting point for creating a new contract request. So obviously when you are first starting, that won't happen, but that's usually you work with your deployment team and they give you that. But you know, it's just like reports. I always work from what's already there and then build upon that. So let's talk a little bit about contract workspaces. They are a component of Ariba Contract Management. So again, this is not included strictly in Ariba Procurement. And they control the creation of a contract. They're also the repository for all of your contract information. They're a special type of spend management project. They're actually considered a project, and they're a container. So we say they're containers for the project and collaboration area, so we can do collaborative work in the project with the tasks and the documents that are associated to it. There, and team members. You can assign team members, right? So we can also work with some external communications. Again, this is sort of mirrored in a collaborative requisition process in the procurement space. It's just not, I don't find it to be as robust, okay? So let's talk about, move this along. So what actions can be handled in the workspace? So you can create the contract compliance request. You can do your editing, changing of contract and contract compliance request. You have contract settings that you can manage in the workspace. You also have the ability to work on your contract expiration and notification messages. So when it's expiring, usually the system, you can trigger the system to send a notification to the contract owner to let them know. Also, that can be done on certain other limits that we define. So when if we're putting in a spend limit on a contract and we're at 90% of that, we may want to notify somebody, hey, we're at that point, it's time to take action with the supplier. And we can also view and change approval flows in the workspace. Okay, so that's just much like you have an approval process on your requisitions, you have them on your workspace as well. They have their own. Okay. So when we talk about creating a contract, we've talked about, again, contract management and contract compliance, and I'm trying to show these two together as a comparison. If you don't have contract management, you don't have the collaborative sourcing subscription, it's okay because we can do the majority of this in our procurement solutions, but I am trying to show for those who are suite integrated how this fits in, right? So you can create a contract term document within a contract workspace, and that you're going to see there's in your actions, create contract terms, it's on the document itself, the workspace. You can also be created within the template, and it'll just it'll be there for users automatically. So if you set up your templates with these terms, then they'll be there. You can just select them at the time you're creating. Most will do that at the time that they're using contract management. You usually set up a couple of sets of contract terms that are standard. Okay. You may have tasks that are and documents that have to be completed in that process. So, possibly a legal review, attachments of signed agreements, things of that nature may be there, okay? When you use contract compliance with contract workspace, then you have one contract workspace template, usually without some tasks or documents, to get that creating of the contract terms, like it's a terms only type of thing. We use that when we don't want to go through all of those, just to get that sort of that standalone agreement in. So that's kind of a common practice to have. We sometimes call it a bare bones type of thing in our demonstrations, right? So it kind of gives you the functionality of just contract compliance when you don't need all the contract management functionality.
Alice,
that workspace, yeah.
I'm sorry. There's a couple of good questions that fit right with the slide. Do you want to take them now?
Yeah.
All right. Any difference between contract requests and contract compliance requests?
No, not that I know of. And Deborah, if you know differently, I don't think so. So a contract compliance is what we call the feature. A contract request is the document type. Yeah, the mechanism within Ariba.
The next question is, can we still use the contract compliance feature if our organization is not using Ariba for invoicing?
Yes, so you could, if you want to, if you use P2O, procure to order, you can use contract compliance. You would get you would usually do that with release. I mean, I guess the idea is, if you wanted to invoice against that contract, you would have to somehow get the invoice against the contract. So if your invoices are not coming over the network, Ariba network, someone would be manually entering those invoices against the contract to get that spend against the contract and then passing them through. But if you're using just procure to order, you could, from the sense of getting that workflow and getting the pricing terms and so forth, so you would most likely do that with release.
One more question.
Yes.
How does a contract line items document feature fit into this diagram?
Oh, that's a whole other session. Yeah, you know what? I don't see a dresser in here today. Contract line item, it truly is something in and of itself, and I won't get to address it very much today. But if you want to, in the comments or in the chat, give Deborah your email address. I will follow up with more details on it. It's a little more complex than this session we'll get into. I hope that's fair.
That's fair. Final question. Will no release have receipts to be done before invoicing? Oh, wait, let me restate. Will no release contracts have receipts to be done before invoicing?
So you can enable that. Typically, no, though. I mean, the whole concept with a no-release invoice is that you would want to, it's the type of spend, say, like, it's very good for like a service contract where you've negotiated pricing, but you don't really know that demand. I always use the example of a plumber, and you've got a contract with a specific service provider, and you have an hourly rate that you've negotiated with that service provider. Your pipes burst, you don't have a release on that, and usually you don't have a receipt. You just want the supplier to be able to invoice directly against that to get the pricing. So typically I'd say no, but I don't know, Deborah, do you have any examples where receiving with a no release is applicable?
I don't off the top of my head, I'm sorry.
No, yeah, it's really not something that is done because you aren't necessarily receiving the, again, not typical.
Right.
So apologies. And if I can think of one, I'll send it along.
All right, that's it for the questions right now. Thanks.
Okay. So there was a little note here I was going to say, once your workspace is completed, you actually have to publish that workspace. And when it's published, then it will prompt you to submit the contract terms document, which is the contract compliance, this piece here. So, you know, once you get to publishing this, then you kind of get to this for the approval flow. And there's a wizard that kind of drives you through all of these steps. So we're going to continue to talk a little bit about contract workspace. And again, I know that this is more on the collaborative sourcing side, but I think this is the feature in Ariba that bridges us from all the way from discovery all the way to payment. This contract piece is the one that bridges your buying and your sourcing, and so it's good to talk about this, right? So contract workspaces, when a contract compliance document exists as a contract terms file on this documents tab, right? So you're going to see that there. That's your pricing terms. And then it's created in those actions here, or it can be built within the contract workspace table. So you have two places. You can, like I said, manually, or it's part of, it can also be added to the template, right? So that's just where, And now we're going to look at confirming that. So your data is automatically pulled from your workspace into this confirmation screen when you create your contract terms. This is what it looks like in the system. It's going to ask you, and this is all the information that you're going to have filled out, and you're going to confirm it. Some of this will not be editable. because within this contract terms area. So you created it in the workspace, it comes over into the terms, it's sort of this confirmation area. So you really need to be sure that when you're in your contract workspace that you're choosing your correct values, because you will not be, and once you're done here, you can't go back and change. And one of I was the client earlier this week, and they selected something and it was causing behavior that they didn't want, and we basically had to go back and recreate. It was painful. Okay. So let's look at a draft of what contract terms, and this is the wizard I was describing, right? So you're going to see it's going to step you through this 8-step process. Okay, so here we are, we're on a contract request, and we know this because of that document identifier. So you've created your contract terms with, we're going to say you did this within your contract workspace. If you didn't, this is what it's going to look like. This is sort of the part that we come to when you create your contract request. So this is the 8-step wizard. Some fields, again, will not be editable here because they were defined earlier. Some functionality is handled by the contract workspace. As an example, the expiration notifications and your edit access. You have to publish the contract from contract workspace and not the contract terms. So this is just, you know, a flow of what you're doing. Okay. So once you publish the contract terms, there's this button for this contract workspace, and that will bring you back to the contract workspace. They're linked together. Okay, so this is the contract workspace. So you're bouncing between your realms. Okay. We're going to talk now about release order contracts. I know I'm jumping around a little bit, but we're trying to find a good flow for this, and this is what I found.
Can I stop you right there, Alice? I'm sorry.
Yeah.
Question, how can I create a contract term if I don't have an existing contract workspace?
Would you not have the existing contract workspace? So I guess the question is, if you don't have the existing contract workspace because you don't have contract management, then you're going to do these terms as part of the contract request, and they're not as robust, but you'll have it. Otherwise, you need to create the contract workspace in order to do that. I don't think it's possible to just create terms without the workspace in an integrated, a suite integrated environment.
Correct. That is true.
Right. Okay.
That's it. Thanks.
Okay. So release orders, we're going to talk about these. So this is where we're going to have a purchase order associated with the contract. And so it allows purchases to be made against that contract. It, when I say it automatically, oh, and let me just say this, I meant to step back a moment. When we're creating the, in a contract wizard, there's a question that's going to ask you whether or not the release is required. And this is going to determine whether or not that we're going to require this purchase order again. And why you might do this is they match the pricing terms to the items that you've added to your requisition, and then they accumulate the spend. So you have these automatic adjustment of accumulators as the release orders consume funds on your contract. Your contract compliance is going to automatically adjust the accumulators that track your values, such as what's available amount left on the contract. So if your contract is for, again, a fixed amount and you're spending, or maybe you have tiered discounts that say at the point that you reach another threshold, your discount gets deeper, right? You want to be able to accumulate those. This also allows for that standard procurement functionality, so you can use these basically with the same idea as a change order, or if you want to split your accounting. That type of functionality is allowed by using the release, whereas with straight up invoice against contract, it's more difficult, right? You can't do a change order. It's basically just an invoice against the contract, okay? When it says automatically attaching to the requisition, so if the item is covered in a contract, the system automatically attaches that contract to the requisition. The user doesn't have to figure out that this is a contracted item. They just kind of go in, they have a shopping experience, and the system says, hey, you know what, that one's on contract. You get 10% discount. Boom. Nice. Also, we can allow users direct release access, and that means that you can allow them to basically just do a release against the contract rather than going through the catalog to generate these release orders. Really, I think that's typically reserved for a buying organization. You don't put that one out to the masses, but it's out there and available. And we'll talk about what that release access is. So you have auto selection or manual selection as far as the release. So an auto selection, users, it's really with any user. This is what I was sort of getting at before. So you can create that requisition and you're not excluded from that release against the contract. So it just automatically attaches it. Whereas for manual, and this, you know, there are reasons you would want to do this, but you say only the people with this permission have the ability to create a release directly against the contract. So this, again, is kind of used for your buyer groups where you have those restricted commodities, often seen with like IT, where you don't maybe want everybody purchasing servers, you know, smaller line items maybe, but not the big capital items, right? Furniture is another one I see that. So then others can't. However, I will say this, regardless of which type, whether it's manual or auto selection, users cannot be excluded from releasing against that particular contract. You don't want to, that's not what, if you restrict them, then it doesn't work.
So Alice, now we're going to, I'm sorry, go ahead. Do you need P to O or P to P for release orders, or can you use this if you only have document automation?
Oh, I'm not sure about, I don't know document automation very well, but
we can check that and take that offline.
Yeah, I'm going to have to look that one up because I have to think it through a little bit. I'm not sure. I think you would have to, well, yeah, let's just take that one offline, because I'm also cognizant of time, and I think I'm about halfway through at this point. Okay, so accounting on those release orders. So there are certain fields that are defaulted from the contract if you define them for the line item on the contract. So you're going to see when you set up a line item in your contract that you can actually define the default accounting, almost like you're building your own ERP commodity mapping, right? Other accounting fields will be defaulted from the requester's profile and your site account information configured by that ERP commodity mapping. So things like the requester's profile would be like cost center, obviously, right? You can change the accounting on the release just as you can on a regular purchase order, and those should be validated before the release order is submitted. So if your validation is turned on in your solution, it's going to do that for you. It's going to validate that information before you go. If the quantity or the amount is changed on the release order line, then your account type is redefaulted, and that matters to some folks, so you may have to, again, go in and redefine that. So the accounting information on a release order is usually defined in the pricing terms page for each contract line item. If there's no accounting information there, then all the accounting information is defaulted from the commodity code mapping configuration and the user profile on the requester of the release order. Also, by default, depending on which ERP you're using, there are accounting fields that are defaulted from the contract line item to the release line item, which is if you're using Simple Generic or Oracle, your business unit, company account, sub-account, project. In SAP, it's your asset number, your GL account, internal order of project, WBS. If it's PeopleSoft, it's location, account statistics, code, and product. Okay. And then we also have ones that will come from the requester's profile. I'm not going to name them all because it gets a little bit lengthy. And then you can define the account type defaulting based on the line item amount, which means basically, you know, you may have, if an item is below a threshold, then it's a cost center type, right? And then if it's above another threshold, it becomes an asset type, right? That's kind of typical of, again, IT and furniture and other items that become assets over say, like $1,000, right? That's what that is. Okay. Release approval. So a special, you can have requisition approval rules that are, but they have to be, you have to enable a special requisition rule that sets specific approval logic for a release order. So there may be a reason that you want to, or that you need to, have these different from your purchase order, and that is actually, you know, that's not uncommon. It's the same as your standard requisition rules, except there's an additional filter rule called the master agreement, right? And that means you can modify or extend that configuration, but it has this. If all the items are covered by the contract and the requester has permission to create contracts, right, then there's that default logic in there. Otherwise, they're all added to the approval flow. All your regular requisition approvers are there. All right, so I think there's, a contract, there's a create contract permission that's also in this. That's what that is here. If a contract is closed manually and there's something pending, submitted requisitions associated, they're automatically withdrawn. That's another feature from, they'll be pulled out of the submitted status and returned to composing status. They have to be manually edited and manually resubmitted. So if it closes out, and basically that would mean that, you know, your contract expired maybe, or you just closed it because, you know, it expired prior to the natural expiration. You manually closed it, right? So you're going to have to go back in and edit them, maybe to apply them to another contract, or to make them, I guess, a standalone purchase order. I think that's maybe all I have to say on this. So we'll go from there. Let's start with our no release order contracts now. If the no release does not allow release orders to be issued against them, so there's no purchase order. So we talked about that you can allow direct receiving and invoicing, so you can receive against these. It can be used, sometimes we use them when we just turn off the receiving and invoicing and use them just basically for a bookkeeping purpose. That's sometimes what we have in there. That's repository. And you can also put, they also have some additional pricing terms that are available when you select no release. So if you select no, then you say, are you allowed to invoice against this contract, yes or no? Are you allowed in receiving against this contract, yes or no? And that fits in with the fixed and recurring fee items, your costs and expenses and milestones. So they're going to see these pricing terms when you are looking in your item details. So these are commonly used for service contracts. or where you're involving like sort of facilities, excuse me, facilities and maintenance. These are common no release orders. That's the whole idea of the plumber, right? They're allowed to create direct invoicing or direct receiving. So you just want to receive against the contract and then maybe evaluate a receipt settlement to invoice, anything like that. You can do those types of things. And again, like I said, there's additional pricing terms. Okay. When you go in, you're going to set the release required to know in the wizard to get this. Okay. Keep going because I am running out of time. So a non-PO process is often used for services or complex PO-based procurement where there's attributes that drive the pricing sometimes. Deliverables and milestones, this is also recurring and fixed fee costs, service costs that can't be forecasted. And you can also, where you want to monitor the quality of work or the completion of deliverables, you want to know that services have been delivered, or you just have ongoing payments, right? So if it doesn't fit, there's reasons why you might need to handle these in service procurement in areas of services procurement. So if the complexity doesn't fit a standard PO-based procurement process, again, like if you have multi-attributes that are leading you to pricing, when you have deliverables and milestones that require you to track the milestone completion for the payment, you have those recurring and fixed costs that require direct invoicing, and maybe even sometimes on a recurring schedule. Leases fit in very well. You have some difficulty in forecasting your costs, so if you don't know exactly what's going to be, what's being provided may not be available until something else, that's kind of where you're going to get into these. Or you need to just have more detailed monitoring, so whether or not you want to track the quality completion, again, of those deliverables. Okay, let's get into blanket purchase orders. So this is a big one, okay? Blanket purchase orders, basically you have the terms are only used on the BPO, and these can be released or no release. A lot of people think that a blanket purchase order is strictly no release. That's not the case. It can be released, okay? They're sent to suppliers on the network. So BPOs are generally used when you have the supplier enabled on the network. There's not a lot of value add when you don't, because then you become the invoice processor for your supplier, okay? So we send these over the network. They can view the BPOs and their accumulators, okay? A non-BPO contract is not sent to the supplier as a purchase order on the network. So they can punch in and see your list of contracts, but if you allow that collaboratively, but otherwise they're not. If you don't allow collaborative invoicing, suppliers can invoice against a no-release order item level BPO directly on the network using it's that PO flip process, okay? If you allow collaborative invoicing, they can select the BPO, the item, the commodity, catalog, or supplier level contract from their inbox on the network and then punch into your site, creating the invoice. And then a maximum limit is the big differentiator of a blanket purchase order. So you have to select a maximum limit. That's the idea, that it's sort of an open purchase order, but at some point you're going to cap it. It's going to say at $100,000, no more. That's at some point we're going to have to address this with the supplier or a purchasing group. Okay. Now when we go in, and you're going to see in the there's these pricing models. We've talked about these throughout the discussion today. This is a selection that you're going to actually make when you're creating your contract. So these are this table describes each of these, and we talked about it a little earlier. So if you have these types, what will you get from each type? So you can see the catalog item level gives you everything. Supplier levels give you others, commodity level, and the non-catalog / item level gives you all of these as well. So here we're talking about a non-catalog item. It's an item you created in the contract, not an item in the not an item that the requester created during the requisition process. Okay, so it's a little bit different. Just to be clear on these are the items that when you're creating your contract, you can actually create these item levels and get all of this. So you can see between the catalog and these non-catalog item levels, you have mostly all the same. This is why you need to consider if you have tiered quantity or tiered amount, if volume discounts, you're going to have to go at some sort of item level versus commodity levels, which will give you these based on total volume. So let's get into generated subscriptions. This is what makes a non-catalog contract item available in the catalog. It's an item that does not already exist in the system catalog, as we, again, want to define that. The contract catalog subscriptions are the implementation mechanism used within the system to make a non-catalog contract item temporarily available in the catalog. And they enable users to search on these non-catalog contract items as if they were regular catalog items. So this is usually something that you want to include. They're also the vehicle used to manage the item visibility. So if you want something in there but you don't want them to see it, this is something that you could use, right? These subscriptions are created using the auto catalog creation. They're used in conjunction with the item level contracts only, because you don't need them at supplier or commodity code level based on what we just showed you before. Within the auto catalog creation, the items become searchable, which is, again, and the email notification is sent when the catalog import activation or deactivation fails. So you're going to know that when these happen. Okay. Sorry, I'm rushing. Discount pricing. So discount price. Only a line item level contracts can use pricing structures that are based on quantity or indicate a specific discounted price. So we showed that just a moment ago in that right, because you can only look at the specific price on an item versus commodity and supplier are going to be broader, right? So it can be used for both catalog or non-catalog, and at the point that you set the price of the item. You can also have a discount percent. That can be used on all contract types, and it can be used with both catalog and non-catalog. So here you're seeing this is specific to a price, that discount price, whereas this is a percent overall. Okay. Next, we're going to talk about milestones. So milestone is a set of conditions or requirements that must be met by a supplier in order to achieve the terms of the contract, the deliverable, right? Successful completion of a milestone usually results in payment to the supplier. So at the point that we acknowledge and receive that milestone, then we're going to say okay to pay, right? The payment can be triggered by a supplier invoice and verified by a specific user in the contract if it's a no-release or order contract. So we can go in and say yes to that milestone. They can be added to any level or type of contract. So it can be supplier, commodity, item, but they can only be in a no-release. Sorry. Sorry, no, that's not true. So internal milestones. So milestones with a release order, they're used, you can use them as an internal milestone. When you include milestones in a release order contract, they're treated as internal only, right? So they're not really with the supplier. They're just used for notification and bookkeeping purposes. There's no limits associated to these internal milestones. You can set a verifier, and you can set the timing on the notifications. So again, you might want to make sure that the supplier sends in a requisition report. That would be something that you're using these milestones to go ahead and track, okay? Or do the receiving. Milestones with a no release order contract. So you can include milestone item limits that determine the amount a supplier is paid for completing the milestone. When you include them in a contract without release orders, they're more functional. They may include milestone item limits to determine the amount that a supplier is paid. The maximum amount is the total amount that can be invoiced or received against that milestone item, and the tolerance is a % above the maximum amount that can be invoiced or received against that milestone. So you might want to put a little buffer if, you know, rounding or something like that. If not, if there's no tolerance, it's absolute. Access control. So we talked a little bit about this, whether the edit permission for the contract request and the release permission for the contract, right? An integrated system that where you have contract workspaces, you cannot edit the contract directly. Instead, you have to edit the contract workspace. So that option is in the request wizard, whether or not you're going to specify a list of users who can receive notifications when the contract is approaching its limit. So you may want to extend the contract. When you don't have workspaces, only a user with edit access can edit the contract request. The creator of a contract is automatically given that edit access on the contract. And then users on the edit access list will receive notifications when the contract is approaching expiration, and you set those who they are. For release access, a user who has release access to a contract can create release orders that release funds against the contract. To create a release order, a user must first create a requisition, because that's the release, and then they can create a release order in the following ways. So they can auto-attach, which we talked about a little earlier, or we can do the manual selection. So those are the two ways. Okay. And on the access control page, here you're going to see where you can restrict release access. So this is where you're going to be able to define who can edit and this release access, okay? Next, we're going to go into our payment terms. So you can see we're sort of working our way through our wizard here, okay? Payment terms specify when a supplier must be paid for an invoice against the contract or release and define any discounts that are available for early payment. Users don't create new payment terms, okay? So they come, they're from a select list available terms that have been configured at your system level. So you don't come in here and create a new one, okay? So nobody thinks that that's a good thing, okay? Next, we're going to talk about appendices and attachments. So an appendix is a document that's part of the contract, and it can be transmitted to the supplier as part of your bid process during a sourcing activity. Whereas attachment is a supporting document for a contract, okay? It's used to justify a request to approvers. It's not necessarily part of a contract, and they are not generally transmitted to suppliers, okay? An appendix also can be referenced by an individual item or the entire contract, just as a note. And we can have multiple appendices, so you don't have to have a single one, as you can see here in the screenshot. And that can, you might have one for terms and conditions. You might also have one, an NDA, as we have here, or specifications related to whatever the contract is, drawings, floor plans, that type of thing. Okay. We talked a little bit about this contract request versus the contract and what's on each. So they have, your contract request is, I sort of equate this, if you're in procurement, to the invoice and the invoice reconciliation. This is the one that has the approval flow, right? And usually the approval flow is much like your requisition, okay? The contract is a separate document. It's a copy, basically, of the approved contract request. it can't be altered. Okay. Shall I stop there? Are there any questions? Because we are right at the hour, and I have a few more to go.
Let's stop there. I don't have any other questions. The one that I do have we'll take offline. If anybody wants to talk to Alice now, you can press *6, and we can stick around for another 10, 15 minutes to entertain questions. If you want to send them through the chat, I'm still recording those. Those that we need to take offline will do so. And I do have the email addresses of all of you who wanted the deck to be sent to you. We'll make sure that you get that as well. Alice?
Yeah, and I was going to say, I have a few more slides. I will burst through these as fast as I can. But if anyone has questions, just chime in. So we're going to talk a little bit about tiered pricing. So tiered pricing is based on quantity or a monetary amount. It can be, defined in these two ways. So it's, the quantity, though, is only available for line item level contracts, whereas the monetary can be on all contract types. Your pricing tiers get calculated in two different ways. They can be cumulative, so if you have price breaks that are calculated based on total cumulative amount of ordered against a contract over time, or per order, so the discount is applied if a tier amount or quantity is met on a single order. And that's just how those are constructed. We'll get into contract-based invoicing requirements. So one, the supplier has to have access to the contract, right? Usually either through a contact person or through collaborative invoicing. For a user to create a contract-based invoice, either the supplier needs the proper access or a user within has to be able to create the invoice, non-PO invoice entry, right? The supplier, if it's going to be collaborative, depending on your site configurations, you can either use the collaborative or you can allow them to do basically that PO flip that we talked about. I think we talked a little about this earlier, but accounting information is inherited from the associated contract line item if it's defined. It'll be defaulted from the invoice requester, user profile, and your site's account information based on the commodity code if it's not defined on a contract. Header level charges, shipping or tax, they inherit accounting defaults from the first invoice line. This is really important, right? So if you have multiple lines and that first line is going to someone's cost center and the second line is going to another person's cost center, all that shipping and tax goes to the first line. Line level charges inherit the accounting defaults from the associated goods or services at invoice line. So this is where we can apply this, those taxes are applied at that level, then we can do that, right? Receiving in the three-way match. If it's enabled, a user can receive against the contract. When you create a contract without release orders, users can receive directly against the contract. When direct receiving is enabled for a contract, users can receive against the items on the contract pretty much the same way they receive against the items on a purchase order. So you kind of go in and you accept and so forth, okay? If receiving is not enabled, it will perform a two-way match between the contract and the invoice. You can consider additional invoice level approvals for those use cases if you want. The advantage of enabling invoicing and receiving on a non-release order contract is it enables you to do that three-way match. Still, in the invoice reconciliation process, in the absence of a purchase order, the three-way match becomes invoice, contract, and receipt, okay? If your receiving is not enabled, you can do a two-way match between the invoice, just the invoice and the contract, okay? And this is where it's set, just so you know, okay? Wrapping up really quick here. So we've gone through a lot. I have a few follow-up items with you that I will, hopefully Deborah's captured everything for me, and we'll be following up later today or tomorrow based on my meeting schedule. And in the end here, I just put a little map of the buying process and invoice process in P2P, right? So this, again, procure to pay. But this kind of gives you an idea of, how you should be using some of the features and where contracts will sort of apply in your buying process. So something to consider. upcoming webinars. So we were in here today. We have a few more. This is sort of upstream for those user licenses, conditions, and Ariba Pays, our Ariba procurement coming up. So if you're a subscriber to the BPC, either through purchase or subscription, you have access to expert consultants like me or Deborah, and we give you strategic advice and guidance on getting the most out of your Ariba solutions. We focus on your adoption. We want you to get the most out of what you've paid for, okay? If you have any questions about how to engage with BPC, contact your CEE, your Customer Engagement Executive, and they'll put you in touch with your consultant, okay? I really, really thank you for your time. Thanks for hanging. I know I went over. It was a lot to cover, and I hope that you found this helpful. Have a good day.
Hey, before you drop off, Alice, there's a question from Summer, and I know she's still on the call. Is there a way to dispute an invoice fully or a portion, especially for a no release, is her question.
So disputing invoices is you can reject the invoice back to the supplier if that's what you want. If you allow for, I guess what they call it, it's when you dispute, sometimes you partially pay the invoice. There's a feature on the IR for that as well, to short pay, right? I guess that's what it's called. So you can do that within the IR document, and most times we would reject back, though, based on that, you know, if you have that verifier set up, it's usually the contract owner set up to verify, and they can reject the invoice.
Can the buyer self-bill against the contract?
So we talked about that BPO scenario where your supplier is not on network. I don't know if that's what you mean, but the other thing that can be done is we have a feature called evaluated receipt settlement. And I mean, it's something that you enter sort of an agreement with your supplier that says you'll generate the invoice off of the receipt. So when the receipt is done in Ariba, we self-generate that invoice, as you say, on behalf of the supplier, and the payment is done that way. So I hope that's what you meant.
All right, so that's the end of the questions that I have. If anyone wants to ask a question, you can hit *6, I'm sorry, not mute, but hit *6, and you can ask directly. Otherwise, we'll be finished with the call for today.
I'm open to questions, comments. We're also always looking for feedback from folks on what kind of topics you'd like to see in our series. We offer these, as you can tell, several times a month, and we're really trying to get the procurement topics in line with what folks have been looking for, because in years prior it's been primarily sourcing and contract related. So this last year we've been building up the procurement-based topics, and we'd love to hear from you and get your feedback. So this email address is one that you can use to let us know if you have any follow-up feedback or questions that we'd love to hear. I'm just going to say thank you all and have a good day if there's no other questions.
Hey, this is Chandra. I have a question. So you just said we can request for any other sessions that we are interested in. To whom we can request? To
this
Sharon,
email address, can you see my screen? ARB_BPC. If you want to send something there regarding topics that you want for future presentations, we'd love to. We've started our 2017 planning, so we're going to be putting out January schedule pretty soon. But we're very flexible if something comes up.
Oh, sure. Thank you.
Okay.